All right, welcome everyone again to class this morning. Today we're going to be talking about investing in mutual funds, bonds, Sukuk, and other fixed income investment. I want to start by explaining how the word economy works. Everywhere in the world, the economy of countries run on debt. Debt is a foundational element of the modern global economy. It fuels growth, enables investment, and allows both government and corporations to manage cash flow and fund large-scale projects. I made an example yesterday, or I made an example in our last class. For those that always run away from debt, you don't want to have anything to do with debt, that if you got a contract to supply what you currently sell to 1 million people, where are you going to get the money to fund that kind of transaction? You cannot always avoid debt. What you need to do is understand how to use debt for growth opportunities, whether as an individual or as a government. So all countries of the world borrow money. So when you see on the news, Nigeria has gone to borrow again, and they say, again, we are borrowing. It's not a big deal. I think the challenge that our country has is the fact that on our supply side, it is low. On the demand side, it is high. What do I mean by that? You earn 100,000 naira, and the repayment on the debt that you have taken, you need to pay 150,000 naira back monthly. You're already in minus. As a matter of fact, your income is not even enough to pay the debt. And the right proportion, the right thing to do is keep your debt to 1/3 of your income. So, example again, if you earn 90,000 naira and you want to take a loan, any loan that you want to take that is tied to your personal income should not be more than 30,000 naira repayment every month. That is 1/3 of your income. The case of Nigeria is, let me try to, I want to project my whiteboard. So the case of Nigeria is, we are producing, let's say Nigeria is not producing enough to pay the debt that it is owing. Let's say Nigeria is owing, I don't know what's happening to my whiteboard. I'm trying to use the whiteboard, but it seems like it's not working. So an individual earns 100,000 naira, or let's just, for the purpose of mathematics, to make it easy, the person earns 150,000 naira monthly. He wants to take a loan. The law that guides loans, personal loan, read, so that you are in control of your debt and the debt is not controlling you. You should not be paying more than 50,000 naira monthly as repayment for your loan. That way, you still have 100,000 naira to take care of other expenses in your life and maybe still save some from the 100,000 that is left. The situation of Nigeria is such that we are producing at 150,000 naira per month. This is an assumption. We are producing at 150,000 naira per month, but our debt is 500,000 naira per month. So how are we going to survive this kind of situation? When we look at the volume of debt or the amount of debt that we have relative to other countries, we are probably not on the list of the top 20 countries that is owing the most in the world. We are probably not on that list, the top 10. We are probably not on that list because our debt is not so much. But our debt is a problem because we are earning 150K from our income. And where do our income come from as a nation? Our income comes from tax, from the goods and services that we produce in the country and export, right? Or the one that we produce and sell in the country, right? So this is where our income, oil revenue, non-oil revenue, all of those things. Everything amounts to like 150K per month. But we need to service our debt with 500,000 naira every month. So what we now do is to survive this situation, we now start borrowing from other sources. Maybe we now borrow the 350K from other sources to pay this 500K. And you know that is the problem. You don't borrow to pay without a clear, concise plan in view. You're going to be stuck at some point. This is the challenge Nigeria is having. It's not that our debt is too much. It is that we are not producing enough at the pace that will enable us to pay our debt seamlessly. That said, let me continue with my slide. So the world economy runs on debt. It's not a big deal. It is how countries survive. So how do they really do this? They do this through the capital market. So there is something called the capital market. If countries want to borrow money, they can do through sources. They can do it through two sources. They can borrow from foreign bodies, or they can do domestic debt. Foreign bodies would mean that they are borrowing from the likes of IMF, Afrexim, and all these international bodies, or World Bank. Then domestically, they can borrow from their citizens. And foreign investors can also come to invest within the country in instruments that are raised or that are developed by the government or corporations of that country. So look at it. The capital market is the place where those instruments are traded. It's a segment of financial system where long-term debt and equity securities are bought and sold. Don't forget last week when we're talking about equities or shares, and I said that where do you buy shares from? You can buy shares at the primary market or at the secondary market. The secondary market is the stock exchange that you go to. Some of you that have opened your account right now, and I also showed you how my account is last week. I opened my account and I showed you how you can buy and sell shares. When I'm buying shares on my or through my account, what I'm doing is I'm having access or I'm buying from the secondary market. If I am buying shares directly from the company that is selling the share, it means I'm buying through the primary market. And this only happens when the company is doing public offers. Sometimes companies will come and say that we want to do public offer to raise money. Like what is happening within the Nigerian banks is they are trying to meet up the new capital requirements. And the deadline for that is March 2026, March 31st, 2026. That's the timeline that CBN has given them to raise up their capital. For the first tier banks, 500 billion, second layer banks, 200 billion, and the third is 100 billion. So a lot of them are trying to raise money to meet up that target. They can only raise money from two markets, primary markets or secondary market. Primary market is a place where new securities, look at the word, new securities are issued. Let me help you also understand this. Maybe I should use a more relatable example. You know that if you want to do your wedding right now, and you are going to need 100 crates of Coca-Cola for your wedding, it's unlikely that you will go to Nigerian bottling company in Udo or their factory in Ikeja to buy 100 crates. You can actually go there, but they won't sell to you. They will simply tell you that is why we have distributors. Go to any of our, the best they will do for you is to give you a list that shows the closest distributors to you. You can now simply go to distributors and buy from them. That's a framework that has been established to make that industry seamless. But there are times that they may want to do road shows, or they want to do something that is beyond the ordinary, right? They want to do road show and they want to do publicity. And they now open up for people to buy directly from them that instant. And they say that we're having a pop-up shop at Ikeja City Mall. So they sponsor that program. They bring in a lot of their crates, packets and packets of Coca-Cola. People can now come and buy directly from them. So when you're buying directly from them, what you're doing is you're buying from the issuer, from the manufacturer. The manufacturer is the issuer. I'm using the word so that you can understand it. It is manufacturer within the manufacturing sector. But within the finance sector, we call them the issuer. So in the same way, if you're buying directly from the issuer, but you're going to buy at a reasonable price, the price won't be as high as when you're buying it from the secondary market. I need to understand this perfectly before I move into the fulcrum of today's class. So how do governments borrow through capital markets? Would they just go there and borrow? No. What they do is they would develop instruments. It's called, they are more like promissory notes. That is when you must have heard when people say, when you want to borrow people money, in case you don't know on this call, if you want to lend somebody money, or in the Nigerian language, you say if you want to borrow somebody money right now, there must be something that the person must be giving you back, right? It may be a promissory note, except you know that the person doesn't pay and you are okay, right? There must be a promissory note that the person is giving you in exchange for the money that you are giving to the person. In the same way, when government wants to borrow from people, they will go to the capital market and issue a promissory note. That promissory note can be in different forms. They use it for different purposes, but they are all promise notes, promissory notes. It's simply saying that I pledge to have borrowed so amount from you, and I pledge to pay it back on so date with so interest. That is the fundamental understanding that you need to get where government borrowing is concerned and where the capital market in general is concerned. So the government will go to the market. In exchange for the money you are giving them, they will give you a promissory note. They can borrow the money in the form of a bond. They can borrow it in the form of a Sukuk. They can borrow it in the form of Treasury Bills. I will explain all of this in details in subsequent slides. They borrow the money for, first, infrastructural projects. They want to construct roads. All these beautiful roads that they are doing in Abuja, where are they getting the money from? Where's the government getting the money for? It's from all these borrowing. That's where they're getting all the money from. That's where they are doing constructing the road from. For social programs, they borrow money for social programs. Social programs are programs that won't bring money back into their pocket. What are examples of social programs that have happened in the past? Like You Win, that is it's a youth empowerment program where they will let people submit applications for their business, pitch it, you submit the pitch for the business, they are selected, you go for trainings and they give you seed capital. Where are they getting all those kind of money from? Those are social programs. Where are they getting the money from? It may be from borrowing through all these instruments. So subsidy program. Another example is subsidy program, where they say that the cost of this thing is 100 naira, but government now say a lot of my people cannot afford to pay it. Let them pay 50 naira. I will pay the balance of 50 naira. That's what subsidy is. So where do they get all the money that they use in paying subsidy with? From different instruments. Bonds are sold to investors in the capital markets, right? These bonds, not just bonds, those instruments are sold. And they also use to finance budget deficit. So look at it, the repayment. How will they now pay back? When someone asks a question on the group that this Sukuk thing, because it's government, I'm not very comfortable with it, right? How will they now pay back? Repayment is first off through tax revenues. The money that they make from tax of people and companies is what they use to pay back this, and also from economic growth or economic growth that increases fiscal capacity. Something is missing there. So another thing is, when I was showing you my white paper, I said you are supposed to pay 500K monthly, but your income is 150K. How do you now get the balance of 350K? You now go to borrow another 350K. to pay back this 500K. It is the way debt system works in every economy. So that's what Nigeria is doing. Sometimes they would raise additional instruments to raise funds to pay off existing debts. It is what they've been doing. And as it failed, I have been my first investment into bond was in 2013. And this is 2025, 12 years later. They have not failed once. If you Google it, if you read history of Nigerian bonds and all these federal government instruments, it has not failed. They don't fail. Nigeria is, when it comes to proud debtor, the debtor that doesn't want to be shamed, that will always pay his debts. That's what Nigeria is. Nigeria doesn't owe their obligation where debt is concerned, where debt instrument is concerned. It's so strong that the last time that the government came out to raise investment for Eurobond, I'll get into Eurobond as well, because that's another instrument for some of you that are interested in dollar-denominated investments. Eurobond is a very good opportunity to consider. So when government floated Eurobond last year, they wanted to raise, I think, $500 billion was the plan, or $500 million was the plan. By the time they came to the market, the bond was oversubscribed, and they left with $950 million. So it was 450 over what they wanted to raise. So what does that mean in literal terms, in economic terms? It means investors' confidence on Nigeria is high. This is the time that a lot of investors are betting on Nigeria, that no, this country, we are betting on it. The truth is, most of these other countries have peaked in terms of development. They've peaked. They've gotten to the height of their development. And if there's something you know about the law of diminishing return in economics, once you get to the peak of something, you reach your ceiling. If you don't innovate, you're going to start declining. It is the way it is for everything. Just in your career as well, this principle works in your career. You'll be on the same level for a while, and you don't innovate. You don't change something about it. You don't, spice it up. You're going to start declining. It works like that for marriage as well. If you don't spice up your marriage, be intentional and spice it up, it's going to decline. It's not about the length of years. It's the way the world that we live in currently, this planet Earth, is the way it's designed. It's designed to decline at some point. Right. So that is how government pays back these instruments that it floats. Examples: the US Treasury or Nigerian government issues bond regularly to finance federal spending, with buyers ranging from domestic investors to foreign investors. So now let me move into this. Fixed income and variable income instruments. When you think about all investment, they would fall into these two buckets: fixed income and variable income. Fixed income are those kind of investments that gives you a regular, predictable return over a certain period, right? Meaning that what you will get from it before you start it, you already know. So when you see an ad that says this investment will give you 25% per annum, you already know that that is what you're going to get from that investment. You know that that is an example of fixed income. Variable income, on the other hand, are those that fluctuate with market forces. You cannot know how much you will get from variable income investments until you have started it, until the market has done its job in that investment. Example: if you are starting a business, you can develop a business plan, and I have never seen a business plan that says that the business will not break even in 1 or 2 years. Most of the business plans that I've seen, because I review business plans every day. When people send me their business plan, I'm seeing it. I will see in 2 years they are broken even. In year 1, they are broken even. As is good, because that is from a place of optimism. But the reality is, 99% of the time, the business does not go as you have planned. Businesses don't go as they are planned 99% of the time. It's when you go to the market, you now find out what you didn't find before. The market will now start teaching you the direction that that business will go, right? So that's an example of variable income. You're not sure of what you gain whether it will succeed or not. That's why it's always advisable. Don't go and use all your money to start a business. Start small. Test the market. If it doesn't work like you have planned it, just quickly, you still have some reserve to fall back to. Don't go and use all your money. You start now, and the business now fail. You're now back to square one, and the business you don't have anymore, the money you don't have anymore, and your age has also advanced. You're also in your 40s or 50s. You shouldn't be doing that. That is meant for people in their 20s where you can afford to fail, where you can afford to lose all your money because you still have time to recover the money back. You cannot lose your life savings at 50. It may be difficult, it may be depression that will kill that person on time. Right? I needed to put that out. Variable income. Another example of variable income is stocks. If you buy stocks today, even though you've done all the homework in terms of research, you checked investing.com, like we said last week, you've checked your share recommendation based on your stockbroker. The truth is, those things are not 100% accurate. You may buy the shares today and it can go down tomorrow. And you can buy the share today and it can times 5 the amount you bought it after 1 year. A very good example, I bought Transcorp shares before it now became Transcorp, before they took out Transcorp Power from it. I bought Transcorp shares. I bought 1 million units in January 2023. I paid 1.18 per unit on the day I bought it. So it means I paid 1,180,000 to buy the 1 million unit. Fast forward to 6 months after, June, that same 2023, that share value rose to like 6 naira. I thought I'd made a lot of money, but because I'm a generally patient person, I don't just sell shares anyhow. I wait for at least 1 year to see what has happened. Except there's pressure. I'm seeing a lot of negative in the market about that business. That's the only time I don't allow 1 year before I sell my shares. So I waited. By the time that year was ending, 2023 was ending, and we got into January 2024, the share had gone to 18 naira per unit. So my 1.1 million naira investment became 18 million naira within a year. So think about how the rich get rich. If I had a lot of money, because I know there are people that would have a lot of money, they could afford to buy 100 million units. Buying 100 million units at that time, the person would have paid 100 million naira. 100 million naira has now become 1.8 billion. That is, even if people will say, how much was dollar? That's first thing. That's first question people will ask. How much was dollar when you bought it, and how much is dollar now? And I did the mathematics. When I bought those shares, dollar was 700 naira. The time I was talking about, dollar had gone up to 1,400. If you look at that, that is 100% growth in terms of dollar exchange rates. But my investment went from 1 million to 18 million. That is not 100%. That's not 200. That's not 300. That's not 400. That's not 500. That's not 600. That's not 1,000. That is 1,600%. It means for dollar to catch up with my investment, for me to be in a loss in that investment, dollar must be exchanging for like 10,000 naira to a dollar, which, of course, God forbid, we have not seen that kind of thing. Can you imagine, you wake up and you say, dollar is now 10,000 naira. $1 is now 10,000 naira, right? But to put in context, for me to lose on that investment within that 1 year means dollar must have gone up to 10,000 naira and it didn't go up. It only went 100%. So when people say stock market, don't buy stock. Stock is not a good investment because you don't understand all these fundamentals, right? So variable income, fixed income. One of the words that differentiate between fixed and variable income is this term predictability. Before you start a variable income, a fixed income investment, you already know what you would get. You can predict what you will get. So I just now did some examples of fixed income, some examples of variable income, bonds, mutual funds, fixed deposits, certificate of Sukuk. Those are all examples of fixed income investments. The variable income example are shares, ETFs, rates, and the rest of them. So let's talk about the first one. So I will take each of those fixed income one after the other. The first one is mutual funds. What is mutual fund? Mutual fund is a pool of money deposited by thousands of investors, collected by a mutual funds company, also known as as an asset manager or asset management company. The fund house then uses the pooled money to buy stocks, bonds, commodities, and the rest of them. So mutual funds is a means to an end. When you invest in mutual funds now invest into other things. That's where they now make the money to pay you interest, right? So if I say buy money market mutual fund and you invest in Stanbic IBTC money market mutual fund, they are currently paying 20% per annum. Where do they get that 20% from? It is from all these other instruments that they invest into. Banks would come and borrow money from that mutual fund, right? Bank will issue what is called, they can issue what is called a corporate bond or a commercial paper. Then the mutual fund manager will invest into it. When they invest into the return that they get, they will now share it with you. But the good thing with a lot of money market mutual fund is one type of mutual fund. There are others. We have equity fund that we discussed last week. Equity fund is also a mutual fund. So in a way, not all mutual funds are low-risk investments. What tells whether an investment is low risk or high risk is what that investment invests into, if that is clear to you. So what tells, let me take it again so you can, I'll take it again, I would breathe so you can understand it. What makes an investment low risk or high risk or medium risk is not that investment itself. It is what that investment invests into, or it is what that security invests into. So mutual funds, we have some mutual funds that are low risk, we have some that are medium risk. Why? It is because of what that fund invests into. Some funds invest into stocks. If your mutual fund invests into stocks, solely maybe 80% of that portfolio is invested into stock, maybe 20% is invested into bonds. That is a medium risk mutual fund. That mutual fund will now be called equity fund, right? And that's what I'm trying to explain. This next slide, we have equity fund, which is a type of mutual fund that invests into stocks. We have fixed income funds. It's also called bond funds. That one invests into bonds and other government securities. And this is very low risk. Why is government investment low risk? Because have you ever heard that the government became bankrupt and the country is non-existent anymore? The only way that bond may not work or may fail is if the country itself now declares bankruptcy, that we don't want to exist. Let's say this issue that we've been dragging for a while. Divide Nigeria. They just suddenly divide Nigeria and the entity called Nigeria dies. Maybe that time, then they will now start failing in their investment responsibility obligations. But that is not a realistic thing that will happen in 5, 10, 20 years. Apart from that, so government is actually one of the most, in the financial world, I'm not talking about moral now. A lot of times we think morality in Nigeria, there's a thin line between morality and financial standards, right? So what are the things that are applicable in the financial world? I'm not saying government is not corrupt. I'm not saying government is a good example and all of those things. I'm just saying within looking at trends that is applicable in the financial world, government is still the most reliable partner that a lot of people want to have. Any businessman that you see right now that has made it, especially in East Africa, they have relationship with governments. And it's not only in Africa alone. Look at what do you think Elon Musk is trying to do with the romance with American president, with Trump? His own interest. That's the way business people protect their interests, because they know that a single policy from government can make or mar your business. And it is true. If you look at everybody that has even made it out of Nigeria, I can talk about Nigeria. I'm not able to talk as an authority about other countries, right? About Nigeria. Look at everyone that is a top billionaire in Nigeria currently. There is no one of them, and I mentioned, and I repeat, there is no one that has not gained a favor from government. It may come as tax incentive, it may come as fiscal incentive, it may come as anything. Look, let me give you a typical example. There was a cement that was raining back in the day, right? I won't mention the name of that cement company, but what they do, they don't produce in Nigeria. They only import cement into the country. And it was quite big. It was a big business. They were the market leader in those days. Then Obasanjo came and a bill was developed, or a policy was developed that is called local content law. When the local content law came, he said, what is the big deal? We can produce cement in the country. And they banned importation. Importation of cement was banned, and licenses were issued. And by the time they wanted to issue license, there are requirements for you to get this license. It's not for anybody that will just come and get license. You can't do anything. You don't have money to do the business. You must have capital to that business. It just so happened there was Aliko Dangote that has the requirements to procure a cement license. And then he also secured a commitment from government, maybe for X number of years, to ensure that I make the most of my investments, right? That policy must be strict, and maybe the terms, the entry barrier should also be high. The entry barrier into cement business is high. Dangote is one of the smartest businessmen that we have in this country. Why? He goes into an industry where he has competitive advantage. What does it mean? An industry where he knows he has strength, he has money that requires a lot of capital. You cannot just wake up and start a refinery. Where are you going to get the money from? That refinery, he spent over $10 billion to build it. Where are you going to get that kind of money from? You don't want to say you want to compete with that. So somebody is starting a small business and they're asking, who is your competition? A small fashion business that you're just starting in Moe, and you're saying Gucci is your competition, or Louis Vuitton is you don't know what you're saying. You can't compete at that level. You can say they're your role models. They're the businesses that you are trying to model, you're trying to be like them. So Dangote goes into a business where he knows he has competitive advantage, business that he knows that the entry barrier is high. It requires a lot of money to start it. So that's what it does. So what am I saying? Why did I say all of that? Government is a strong and reliable partner that anyone always wishes to partner with. Another person, Otedola, at a point in time, Otedola's company was the highest importer of diesel into Nigeria back in the day, before the food deregulation of the downstream sector. He was one of the, in fact, not one. If the report is online, these are not just things I'm saying. Go and Google it. I think he said about 80% of the diesel consumption in Nigeria, he was the only one supplying 80% of the diesel that is needed by the whole of Nigeria. You need to have muscle to do all of that. So government is still a reliable partner. Forget about all these things that you are hearing in the media and all of those things, the corruption of government, but you can chart the cost for yourself. Government is still, and all these fixed income instruments that we talk about, the bonds, the big investment, this is where these other big guys put their money, because they know that these things are reliable. So the next one is money market mutual fund. I think I've overflogged money market a lot. If you've followed me for at least 1 month, you probably have heard me say it more than 10 times. So this investment invests in short-term debt instruments. Like I said, when banks want to borrow money, they can issue what is called commercial paper to borrow money. You must have seen commercial paper of Providence Bank. So Providence Bank is not listed on the stock exchange like First Bank, Zenith, and so Providence Bank cannot sell shares in the public as of today because they are not listed. They are still a private bank. Providence and what's the other one? Lotus. No, not Lotus. I think Lotus is on the stock exchange. Providence, Globus, and Premium Trust. Those banks are still privately owned companies, privately owned banks. So the other ways that they can raise money, they can use money market instruments to raise money, right? Commercial paper and all of those things. Then we also have balance or hybrid funds. We have some funds that invest into multiple funds at the same time, right? That's why it's called hybrid. So this hybrid invests into stocks and bonds, And then we have index fund, that is an ETF that is tracked by the computer. So index fund really works like ETF. The only difference is such that it is set up, that is the set of computer program that manages the index. Let me help you understand. So they will say that if you want to invest in S&P 500, S&P 500 is an index fund, but it's also an ETF. It's also an exchange traded fund. Why is it an index fund? Because the system is set up in such a way that there are parameters. When any of those 500 companies, S&P 500 is a global ETF that invests into 500 companies of the world, top 500 companies. They've set up parameters for the system to select the 500 companies. And that parameters also have minimum. So they may say that if the revenue or if the share price of the company goes below X amount, kick out that company from the list of 500 and look for another company that is ranking higher and include that company in those 500 companies. That's the way index fund works. So the system is constantly monitoring, tracking those metrics. And once a company does not meet the metrics, it kicks out the company, replaces it with another one. These are the benefits of mutual funds. You can read up this so that I don't waste so much time. Let's go to bond. What is bond? Bond is a fixed income instrument that government use to raise long-term finance. Bond and Sukuk are almost the same. The only difference is that Sukuk is Islamic in nature, right? And they don't pay interest on Sukuk. What they pay on Sukuk is rent. What they pay on bond is interest. So every month, the government uses bond to raise money from the market. I think it's first 7 days of the month. You always see that ad that will say 16%, 17% per annum bond. They'll give you 7 days to buy it, and then you start earning interest. So let's say the bond promises to pay 17%, and they say it's a 3-year bond. If you want to subscribe to that kind of bond with 1 million, it means what you get every year is 170,000 without fail. You'll get that money without fail, 170,000 every year for the next 3 years. At the end of the 3rd year, they will now refund your 1 million to you, right? So the 170,000 is not paid once. They divide it by 4 and pay you the interest in every quarter. This is a good income stream. If you are someone that wants another income stream, I did a video where I said that, and I think it's a goal that everyone should set. I want to earn some income every day in my life. You may not be there now, but I think that is a good thing to desire. That on this journey that I'm in, I want to make money every day. I want to make money every week. I want to make money every month. I want to make money every quarter. I want to make some income every 6 months, and I want to make some income every year. You see, these six items that I've listed, or these 6 cycles that I've listed, are things that I'm doing right now that is happening for me. I make money right now every day. It may not be much. Sometimes maybe 10,000 naira will enter my account, but there is no day, as far as I can remember, since like 3 years ago, that money did not enter my account. It might be 1,000 that will enter on a day. It's something. You can set that goal yourself. And what can you do? You can develop. What did I do? I developed digital products that I put online. As I'm in this class right now, I just got 2 emails. 2 people have bought my digital book, 3535, 7,000. Maybe before the end of the day, maybe 10 people will buy it. Right. So that's an example. You can have a business that you're not really full-time involved in. You can invest in other people's businesses, and then you get return from them as well. But have a plan to earn some income every day. Have a plan to earn some income weekly. I earn weekly income by doing this class. This class that I'm taking every week, and I take classes every week like this, right? You have paid 50K for this class, and it's 4 times a month that I'm supposed to train you. So how many of you on this call? For this session, it was like, this is the least attended session. Maybe about 60 people. So 60 people times 50, that's like 3 million. So 3 million in a month divided by 4 weeks, whatever that is, that's my weekly income from this. And it's not just by the time I'm done with this call, I also do one-on-one session. I have when I'm done with this call, I'm going to have a one-on-one 45-minute session with that person. My one-on-one session is 150K. So if I have 5 people lined up every weekend, and I only do it every weekend, after my class, I take another 2-3 hours to do the one-on-one sessions that I have. So have a plan to make money weekly. Then monthly, of course, I get salary. Then I also have money markets investments that gives me a monthly income, monthly return. Of course, I don't touch that income. I just reinvest it back. The program to automatically reinvest those. Quarterly income from bond. I have federal government bond that I've invested into that pays me quarterly income as well. I have 6 monthly income called semi-annual income. How do I get that? I get that from my investments in stocks. When you invest in stocks in Nigeria, you get bonds, you get dividend twice a year. First 6 months and the end of the next 6 months. So that's my semi-annual income. Then I have yearly income, the incomes that comes in every year. So I have some investment that only pays me a return once a year. And those are businesses that I've invested into. At the end of the year, I review their financials with, of course, not just me, all the shareholders. It may just be me and the business owner. We sit down, review the records, and then I take return from the business profits for the year. I've just shared my the thing that I'm doing, because this is me. I don't teach what I don't do. I only teach. There are some things I don't teach right now because I've not tried them. I don't know them. I don't have expert knowledge in them. So it would be unfair. It would be hypocritical for me to come and teach them. So that's the way I pick my choose, if I can put it like that. So bond gives you that return on a quarterly basis. And I said it works like Sukuk. Sukuk gives you return every 6 months. I've not invested in the Sukuk, right, yet. It will end on the 20th. I'm expecting some capital. I should be able to draw mine as well. It is for 7 years. So if you don't have any need, maybe you have money somewhere, like 10 million, and you don't have need for it now, because the downside, the advantage of this is once you lock up your money in Sukuk, you won't have access to that capital for the next 7 years, because it's for 7 years. So, but you're going to be getting return. The return is 19.75. On that 10 million, you would get 19.75, you get 1.975,000 naira every year. You now divide that by 2. You get half of it at the end of the first 6 months, the next half at the end of the next 6 months. You get that 1.9 every year, 1.9 year 1, 1.9 year 2, 1.9 year 3, year 4, year 5, year 6, year 7. At the end of year 7, you now return your 10 million to you. So if you think about the total that you have made, you must have made 23 point something million from that investment. And I gave a very fantastic analysis. In case you didn't see that post, you may want to revisit it, where I said that 10 million you can actually turn into 40 million within those 7 years. How? Instead of chopping the interest as they are paying you, it's not called interest, it's called rental. But for the purpose of this, when you think about it, it's still interest. I will tell you why is it called rental. I will quickly explain that when I'm done with this train of thoughts. So how can it become 40 million? As they are giving you the 1.9, you are investing it into money market mutual fund. And money market mutual fund every year compounds. At the end of the 7th year, your money market will have become like 30.5 million. So by the time they are refunding your principal to you, you have 30.5 million in your money market. You just add your 10 million, you have 40 million. And if it is 100 million you invested, the same way, that 100 million will become 400 million. But I like using big figures to expand people's mind, because sometimes when you just use this 1,000, 2,000, people will not understand it well, right? But when you use big figures, it expands their mind. And that's not to say that, well, if it's 100,000 that I have, you can also start with 100,000, because the lowest amount that you can open this Sukuk with is 10,000 naira. But when you think about it, I don't like to deceive myself. If I put 10,000, how much interest to 10,000? It will give you, from 10,000, you have 1 197 naira. Which kind of stupid money is that? Is that what you're going to be? Are you going to be rich on that kind of 1,197 naira? Except I want to deceive myself, right? But if that is your level now, it's a good place to start. The bad thing is you're not doing anything. You're just opening mouth and you're complaining. Start from where you are and then build from there. Right. So bond, sukuk, the same thing. So I said I was going to tell you where does the concept of rental come from. So when they take the money from you for sukuk, you invest in that sukuk, and they construct the road. They say this sukuk is meant for road construction. When they construct the road, technically, the road is not owned by the government. The road is owned by everyone who has invested in that fund that they use to construct the road. The government now leases that road. Actually, you are leasing your road to the government. That's what it means. The government leases that road. And for that lease, there needs to be a renter. So in layman's language, you, 10 people, let's assume it's just 10 people that invested in Sukuk. They put your fund together, construct the road. You become the owner of the road indirectly. They won't, of course, you cannot go and lay claim to the road and say, this road is my own. No. But indirectly, on paper, in theory, the road belongs to all of you that have contributed that money. The government is only borrowing that road and paying you for the borrowing. Government is your tenant. They are now renting that road from you. At the end of the investment, the government now buys that road totally from you, and they pay everybody back their principal. So that's the way the concept of rent comes in. Let me give you another example. If it's a toll road means a road that has toll gates, like Lekki toll road, Lekki toll gate, Ibadan toll gate, I think this pattern one is not working again. Lekki toll gates. You know that they collect toll from that. The toll they collect daily from cars that pass that toll gate is what they use to pay you as your interest, as your rent. Again, it's not interest, as your rental from the Sukuk. But for non-toll road, government leases that road and pays rental. For toll road, it is a toll, the revenue from that toll that they share with people that have contributed to that fund. Let me move fast now into T-bills, because bond is the first instrument, Sukuk is the next instrument. The third instrument that government use to raise money is T-bills, Treasury bills. The difference between Treasury bill and the other is Treasury bills for short term. If they need to raise money for something that they need within the next 90 days, 180 days, or less than 1 year, they only issue Treasury bill, right? Treasury bill are used as short-term government-backed securities issued by the CBN. They are issued when government requires short-term loan. They may reach maturity in 364 days. This is the maximum a Treasury bill can be. 364 days is not up to 1 year, because there are 365 days in a year and 366 days in a leap year. So for 364 days, it's still a day less than a year. So this just tells you that once it is 1 year, the government cannot raise T-bill again. They call it bond. Bond can be from 1 year to up to 10 years, right? T-bills can be from 90 days, 180 days, 284 days, 364 days, but it cannot be up to 1 year. So how does T-bills work? T-bills is one of the most interesting investments in my opinion. Why did I say that? It's the only investment that pays you interest in advance. So what does this mean? Because it is issued at a discount. I'm going to project the whiteboard again to help you understand this better. If you have questions, you can drop them in the chat box. When I'm ready, I will read the questions. Yeah, I should be done in another 10 minutes. Let me try to round up in another 10 minutes. I want to show you how Treasury bill works. Treasury bill is issued by the CBN. You can buy Treasury bill at the don't forget, we said capital market is divided into primary market and secondary market. Don't forget that, right? So you can buy T-bills at the primary market. When you are buying from the primary market, it means you are buying from the issuer of that instrument. And the issuer of primary, who is canceling on my whiteboard now? So, and the issuer of at the primary market is the CBN. If you want to buy currently, if you want to buy T-bills from the primary market directly, from the CBN directly in Nigeria, as of today, you need to have 50 million naira. That is the minimum. If you don't have 50 million, you cannot invest in Treasury bill directly with the CBN. You are stuck with investing through the secondary markets. Again, to explain the concept of primary and secondary market, I said if someone wants to buy Coca-Cola for his wedding, they will say, we cannot sell to you at Coca-Cola factory. Go and buy from distributors. Because to buy from us, you must have heavy capital. To buy from Nigerian Bottling Company, you must have heavy capital because they may say that this is the minimum that we sell to people. They may say the minimum that we sell is 1,000 crates. But you only need 100 crates. So it means they cannot sell to you. You are stuck with secondary markets. In the same way, if you want to invest in T-bill and you don't have 50 million, you only have 100,000 naira to invest, you have to go to the secondary market. The people that bought from that primary market, they can sell at the secondary market. I am a distributor of Guinness. I just bought 1,000 crates from Guinness. I didn't buy it so I can start drinking the Guinness in my house. I buy it or I bought it so I can resell. So in the same way, people who invest in the primary market, especially institutional investors, right? Big guys, institutional investors, all these asset managers that invest at the primary market, they are investing there so that they can come and resell. So a lot of banks, as a way to make money, they buy T-bills from the primary market and go and sell in the secondary market. So you know that as of today, the CRR, this course is going to look like banking and economics class, but it's fine. CRR is called cash reserve ratio. In Nigeria, CRR is 50%. What does this mean in layman's language? It means that if you go and deposit 1 million into your bank account today, the bank only has obligation based on CBN rule to retain 50% in your account. The bank can immediately take out 50% from your money and invest that money, not on your behalf, as their own. They can take out 50% of your money and go and invest it as their own. But of course, how do they take out the money? They will not debit your account now because that will amount of fraud. You can go there and go and key for them that I just got an alert that I didn't withdraw money. They won't do that. You can sue them for that and get damages. So what do? Banks actually create money. What you are seeing on your phone as your balance. Now I'm seeing my balance. My balance is, let me not tell you. My balance is 500,000. Let's say that's the amount I'm seeing in my account when I log on to my app. That 500,000 is not in my account. It's only in my phone. It's digital money, but it's also been programmed in such a way that if I want to withdraw or transfer all this money now, I can transfer it, right? It's digital money that we're all spending. So it's not really real money, right? So the real money that you deposited in the bank, they are free to use it to make additional money for the bank. I think I will explain that concept of banks creating money better during the class on commodities investing. It has a lot of, that class actually has a lot of economics and banking. So as not to waste so much time. So if you want to invest 50 million at the primary, you want to invest in Treasury bill and you don't have 50 million. Again, it means you are stuck with, you can only invest at the primary market. If you now have the 50 million and you want to invest at the secondary market, how does it work? It works through an auction. So every 2 weeks, CBN does an auction where they open up, they say people, they will call out for people to submit bids. Of course, they don't do it online. They do it through asset management companies within their network. So if you open an account with Cordros, Cardinal Stone, or any of these asset management company, you always get an email to notify you that bids have been opened. Send in your bid. So this is how a typical bid will be. I want to invest 50 million into Treasury bill that government is trying to raise. I'll now say, Sheyi sent in his own bid. I will say for this 50 million that you people want to borrow, because now I'm the one borrowing them money, I can be doing shakara. For this 50 million I want to borrow from me, I will charge you 10% interest on it. You are the one that is setting, that's the way Treasury bill works, so guys. You are the one that is setting the term for yourself. I will say, I will charge you 10%. What is 10% of 50 million? That is 5 million. It means when I want to pay for that investment, but because Treasury bill pays investment, pays interest in advance. When I want to pay for this investment, what I will pay is 45 million naira. That's what I will pay into that account. I've removed my 5 million in advance. At the end of that investment, they will pay me back 50 million. So Treasury bill pays interest in advance. This is just bid of one person. Akinwale is here. I'm looking at your names on the phone. Akinwale wants to send in his own bid. Akinwale said, well, me, I'm a bit, I want more money than Sheyi. I will charge you 20%. What is 20% of this? 10 million. It means when Akinwale is sending his money, he will send 40 million into that account. Right? Isioma is here as well. Isioma, like sound of an able girl. And Isioma says, well, as an able girl, what I want is 30% on this investment. That's the return that I want. What is 30% of 50 million? Someone should put that in the comment box for me. So I'm not bringing out my calculator. What is 30% of 50 million? Anyone? It's 15 million. So it means when Isioma wants to send the money, she will send 35 million. Then Eunice said, for me, I really do not want so much money. So I'll just charge you guys 5% interest on this money. Because since Nigerian government does not even have money to start with, people are borrowing, struggling. I'll charge you 5%. 5% of this is 2.5. So she will pay 47.5 million into that account. Thank you, Bala. Okay, let me choose. Okay, Bala. Let's assume Bala is the last person to send in bid. Bala said, me, I'm charging you 50%. You cannot pay it, go to hell. I charge you 50%. 50% of that money is 25 million. So Bala will send 25 million to the account. All these amounts are the bids that have been submitted for 50 million that the government wants to borrow. I'm assuming that the only money they want to borrow in that cycle is 50 million. When they open all of these bids, it is now their duty to select the one that they think is most favorable to them. If it was you that want to borrow 50 million and you have seen all of these bids, I can only select one person. Who are you going to select? I want to read from you guys. Hey, why you can't hear me? Can you guys hear me? Okay, that was an earlier. Can you hear my question? I need answers. So you are the one that want to select. They submitted all these bids to you. You are the one that want to select. Which person are you going to select here? Wisdom Things Unit, iPhone. That's why I said always just put your name. Always put your name when you're in class. Eunice. And any other person has contrary opinion? Any other person has contrary opinion? Do you think it's Sheyi that will select? Of course, because it is you. You think about it now. It is the one that is costing you the least amount that you are likely to select. In the same way, it's not just about submitting bids. Your bids may fail if you don't understand how this technique works. So you need to first study For instance, some brokers, some of your asset managers can share some guideline with you on bids. They may show you that, okay, this was the amount that was selected at the last bid, right? This was the type of amount. So you would now look at the range that they use. You just, this bala is even the fact they will cancel. That what kind of greed? They just think you're too greedy. That you want a low 50% for an investment that is how many days, right? So let's say they now select Eunice and they say Eunice has been successful. Eunice now pays 4.75 million into that account. When the investment is done, they will now refund 50 million to her. You see that she has earned her interest in advance. So that's the way T-bills work. So it's a good thing because it is like eating your cake and having it. When I wanted to buy a car for my wife last year, this was what I did. I just look for a treasury bill that can pay me as high as 17%, right? When I found it, I put in the capital. They paid me the interest in advance. I used the interest to buy the car. And then at the end of that investment, I got my principal back. I did not spend, it's more like I did not spend my money, right? That's what the rich guys do. Anytime they want to buy anything, there's a liability. They look at how can I not deplete my savings to buy this item? And that's how you should also live your life. How can I not dip my hands into my savings? For instance, I want to travel. This year now I have a few trips to make, right? I have a few trips and let me be like to 5 different countries. I've been thinking, am I going to pay for? Because it's not business. It's not really a business trip that will give me money. It's for to attend graduation of a family member, to do this, to do that. Well, how am I going to pay for liability like that? I'm going to look for as an investment that can pay me enough so that my principal is intact. I'm just going to be living and spending my interest on those expenses. That's the smart way to think. But let's go to the last one so that I can allow you guys to ask questions and then we can call it a day. The next one, last one that I will stop on is commercial paper. Commercial paper works like treasury bill. The only difference is while treasury bill is used by government, commercial paper is used by private entities, like companies that are not government companies. But I just told you that Providence Bank raised commercial paper because they're trying to meet up the CBN deadline of increasing capital for all banks. Right? So they raised commercial paper. Sometimes last year as well, MTN raised a commercial paper. Sometimes as well, I think I saw another one. AfroInvest also raised commercial paper. So companies can raise commercial paper to meet short-term or time-sensitive financial liabilities. You can raise commercial paper for things like that. I think I'm just going to stop right now and then I'll send the slide. You can always read them up. And if you have any questions, please feel free to drop your questions in the chat box. If you want to talk, you can also feel free to raise your hand. I'll call you. Let me see if any questions have been dropped so far. There's a pause between the sentences. I don't know what that is. Okay. Do you guys have any questions? Was there anything in particular you want me to say that I've not said before we call it a day? I always like for us not to exceed 1 hour and maybe 1 hour 30 minutes so that you can go through other things. Okay, I can see Val's hand up. Val, you can please unmute and ask your question.
Hi, good morning, Sher. Thanks so much. I think I wanted clarification more on the Sukuk, because you said they only pay rent. What does rent mean that is different from from interest? I know they have Islamic fundamentals, but one needs to. I need a better understanding, more or less, on that. And then accessing the Sukuk, I guess it still has to be with the stockbrokers, or who do you talk to, or where do you go?
Okay. Thank you. Can you guys hear me? Can you guys hear me? Can you hear me? Okay. Yes, I can hear you. Thank you, Fuba. So, like I explained, the truth is, when you look at it critically from a finance point of view, it is still interest. They just found a way to rename it as rent, right? So when you invest in Sukuk, what you will get is called rent. But to you that you're not really a professional, it's still interest. You will get interest on it. And I said, how did that rent come about? I explained in two different ways. You can either, so don't forget that Sukuk is for construction projects, road building, infrastructure building, and all of the social programs and all of that. So let's say they raised a Sukuk to build Fort Milan Bridge, for example, in Lagos. When they now completed that, when they complete that bridge, how will they now be paying people who are the owners? Government will now devise a means to say that we don't have the money. The reason why they would raise Sukuk to build a road is because they don't have the money to build it. But we want to build that road. They now got a bunch of people together to put money together to build that road. Indirectly, that road is owned by those people. It is not by the government. And I also said that the fact that the road is owned by you as an investor doesn't mean you can go and hold government by the hand and say, this is my road, this is my road. No, we know that. But in theory, that road belongs to you, the investor. What the government now does is to lease the road. They borrow the road from you. It's like a rent where you live in a landlord's apartment and you pay rent on an annual basis. The government leases the road and starts to pay you rent. So that's where the term rental comes from. It is the rent that the government pays for using that road that is cascaded to all investors in that program. At the end of the lease period, the government will now buy back the road. And that is where your principal refund will come from. So that's the way Sukuk works for a non-toll road. There are two types of roads that we have generally. We have toll road and non-toll road. If you live in Lagos and you go to Lekki, you will see a toll gate in Lekki. That is a toll road, a road that has toll gates in it. For a toll road, it's easier. They don't need to lease the road. The revenue that is made, you know that when they locked down, when lockdown happened, when they did this Lekki riots, NSAS, and then they locked down, they said they won't let government collect toll and all of that. The implication of that is that the investors in that road project will not be getting money. They will not be getting their return. They can't get their money. So that's another disadvantage, actually. That's another thing that can stop the return that you get from your Sukuk. If there's a riot and people do what they did in NSAS and they don't allow the toll gate to function, that toll gate probably didn't function for like 1 year. Of course, government will save faith. They will find another way to continue to meet that obligation. But normally, the payment to investors in that project should come from the toll that is received from that toll gate. So if you want to open a Sukuk account, or you want to invest in Sukuk, you still need to go through these asset management companies. You don't need to open additional accounts. Just ask them. They will send you a form with them. You fill. Once you fill the form, they will give you an account to pay. They will now be the one to collate all the investors within their own company. They will now send it to the body responsible for that Sukuk. It's called Debt Management Office, DMO. They'll now send you DMO by themselves. But that's the way it works. You need to still reach out to your fund managers. Let me read some questions. What stocks would you recommend for a beginner? Stocks with potential for growth. I think I already said this last week. If you watch last week's class, you will see a lot of insight on stocks. I said the best way to know the stocks to invest, the ARC, is for you to open an account with any of these brokers. Once you log into your stock account, you see recommended stock. They always put it there. It's there constantly. And those are stocks with potential. But for some sort of safety, The companies that I always encourage people to start with are the dividend-paying banking stocks. You cannot really go wrong on those stocks. Even when you are not making capital gain, you know that dividend is coming in. I've probably gotten over 2.5 million in dividend alone this year from different banks that I have shares in, right? I've gotten from UBA, I've gotten from GT Bank, I've gotten from Zenith, I got from Access 2 days ago, I've gotten from Fidelity. So those are stocks that you can invest in. For other companies that are not banks, I would say for now, don't invest in Geregu because I think Geregu has peaked or is already at. I invested in it when it was 250 naira. And that my 250 naira has grown to 1,150 per unit. But that stock has been on that 1,150 for more than 6 months and it has not gone beyond it. So I think, in my opinion, I think it has peaked. So when something has peaked, like I explained the law of diminishing return, if nothing happens in that company, the share price may continue to fall, may fall back to like 900 self, right? So I would say for that one, don't buy for now. So buy the regular banking stocks and open a stockbroking account. You can now use stock recommendation that your shareholders share with you from time to time. Can you explain the difference between effective yield and discounted rates in commercial paper issuance? Okay, so this yield and interest. First thing you need to understand, yield and interest. There are two terms that is used interchangeably. When you want to invest in an instrument, they tell you this is the yield on that investment. They also tell you this is the interest rate it pays. Sometimes the yield may be different from the interest rate. The yield will be like 23%, and the interest is 21%. So the yield is technically is literally telling you about the year-on-year trend. The interest rate is the guaranteed, right? This is the interest that we guarantee 21%. But when we look at the year-on-year trend, how has it done in the last 3-4 years? We have seen that it has grown by like 23%. But we are being safe because don't forget it is fixed income instruments, fixed income. And the fact that it's also fixed income doesn't mean that it cannot go higher. Sometimes it can go a bit higher, sometimes, but there also is a point of safety. So that when they tell you that the interest is 21%, but the effective yield simply means how that investment has done over the years, right? They also want to show you those percentages to give you a level of comfort. Yeah. And again, the discounted rates, another one that you also mentioned here. Discounted rates also means that T-bills and what's it called now? You see that explanation I gave on that T-bill where I said Unis wanted 2.5%, Sheyi wanted 10%, Bala wanted 50%. Those percentages are the discounts. T-bill or commercial paper is issued at a discount for you to really get the benefit of it. Government wants to raise 50 million naira, but she is willing to pay 45 million with 5, assuming they accepted my application and they say my bid is successful. I've successfully gotten 5% discount off the value of that treasury bill. So that's the way it works technically. Is it advisable for me to use ARM for money market mutual fund? Of course, yes, it is. Just need to check. Are they the best in terms of the competitive interest rate? I think money market is one thing you should always compare and contrast companies. It's not just about the interest alone. You also want to look at the strengths of the company. How strong is that company? Now I have 2 different money market accounts. I have one with First Bank, First Asset Management. That's the subsidiary of First Bank that is an asset manager. I have another one with Stanbic IBTC. I recently now opened another dollar fund with Standard Chartered when I started to talk about their bank, right? So the advice for me to you, yes, you can. Also during class, you mentioned how you can turn the 23 million from investments in bond to 40 million. Yes, I already did that. The question is, one just puts the money in mutual fund, won't the person earn higher given that rate? Okay, I think someone has asked this question when I posted that video on Instagram as well. So you need to understand that money markets, what are the advantage of Sukuk or bond over money market? First one is there is no tax. In money market, stock, all other kinds of investments, before your money is paid to you, they remove tax, withholding tax of 10% is taken out of the money. In Sukuk or bond, there is no withholding tax because it's government that is borrowing money. So that's one of the privileges. The other privilege is the fact that it's government, right? And it is more, money market can go up and down. Money market is not fixed. It is determined by the market forces. It can go up, it can go down. But bonds is static. It tells you this is the amount, or Sukuk is static. This is the amount it's going to pay you throughout the period, and you are sure that it's that amount. But sometimes money market can be 20. For instance, now, I think towards the end of last year, money market went up to like 23%. It has gone down again now to like 20%, right? It may go up again to 25%, who knows? But that's the technical difference. So you must just understand that. But another thing also is, it could also be a diversification strategy. Don't forget, why am I telling you about all of these various investments? Is so you can create a diversified portfolio in such a way that your money is not tied up in a single investment. I think those are all the questions that I have for now. I want to thank you guys. I think we are still right on time. The class is supposed to finish at 12:30. I take class for 1 hour, then answer questions for 30 minutes. So we're still on course. How can one invest in commercial paper? I understand that we share stock. We can begin with opening stock position. Commercial paper, they will tell you the duration, but it's always less than 1 year. It may be 90 days. It works like Treasury Bill. The way you can still your stockbroking accounts. Stockbroking accounts is not just for stocks. Stockbroking account is, maybe I should even start calling it a capital market account, right? It's an account that allows you to do much more than buy stocks. Any of these other investments, you can do it through your stockbroking account, as far as that investment is in the capital market. If I tell you about REITs now, real estate investment trust, is in next week's class. How do you invest in real estate investment trust? The same capital market account that you have opened. How do you invest through bonds? Through the same capital market account that you have opened. How do you invest in equity, in stocks? Through the same capital market account that you have opened. If it even needs another kind of form, because the money is not going to be with the fund manager. For instance, I just told you about Sukuk. When you invest in that Sukuk, they need to now collate all the people that have invested and send all the record to DMO, right? So for that Sukuk now, you may be filling an extra form, but your broker will provide that form for you to fill. For money market, can I withdraw at any time? So this is another disadvantage of money market compared to Sukuk or bond. Once you put your money in bond, that money is locked away for the entirety of that investment. But for money market, the truth is, when you want to withdraw inside money market, the first 1 month is what the only limit. Meaning that if you start a money market investment today, you cannot withdraw for the first 30 days. If you have gone through the first 30 days, you can withdraw the money within the next 24 hours. If I want to withdraw from my Stanbic right now, I'll just go to my app, click on withdraw. But because today is Saturday now, I won't get the money. But I'll get the money before 4 p.m. on Monday. That's the way it works. If it's a weekday, if I do it on Monday, if I do it early in the morning, so the way Stanbic works, they will tell you that any request that is not submitted before 12 o'clock will be processed on the next working day, right? So if I fill my request 8 a.m. on Monday morning, a work day, I can get that money before 4 p.m. that same day. So that's why I said you can even use money market as an avenue to save your emergency funds. When they say emergency savings, put it in that place so that it's not just in a normal account where you're not earning anything on it. How can I open a stockbroking account if I live outside Nigeria? As far as you're a Nigerian, you can open stockbroking accounts. The only thing they will ask you is your BVN, NIN. If you don't have those ones, you cannot open accounts. So sadly. But if you have your BVN, NIN, you can open an account. Any of these companies that I've listed, I've sent a form to your WhatsApp group. You will see some of the accounts officers that you can reach out to. I don't have to use those ones. There are over 100 brokers in Nigeria. You can simply reach out to any of them. They have online, all of them have online presence. We're in the days of digital right now. Some of them also have apps. Why I don't always advise you to first go through app is, what if you go and download the wrong app? What if you don't know the right app that they come? Because some of them, for instance now, Codros, even though the name of their company is Codros Asset Management, their app is called Codros Cape or something like that. Cardinal Stone, their own app is called, at their portal, it's called CS Alpha. How would you figure out that their app is CS Alpha if you have not spoken to them first? I always like people to speak to the companies first, ask all the relevant questions that you may have. In fact, go on their website, read as much as you want to read. But whether you live outside Nigeria or not, you can open an account. That's the long and short of the story. They'll be asking you. In fact, I would prefer that when you are providing details, provide your details so you are still in Nigeria. Don't tell them that you live abroad, or just give them your normal Nigerian details. Why? It's not because of anything. It's because if they give you a form to fill and you put a UK or a Canada address, you have to go and notarize that document. They'll take it to court or a notary public to notarize the document. They'll be asking you for different things because it will now be seen as a foreigner investing into the capital market. So they will treat you as a foreigner, and it comes with a lot of requirements. It might be back and forth. You just get tired and you will not continue the process again. So what is the easier option? If you're already in Nigeria, you have your BVN NIN, and in your former house where you used to, I'm sure that one of your family members is still in Nigeria. You can use that family member's address and ask them they'll ask you for utility bill. Ask family member to send the utility bill, because utility bill is not to check your name, whether your name is correct or not. It's just to verify that you have a physical place of residence in Nigeria. So when you give them a utility bill and they want to check, it doesn't have to be your name on it, because some of you don't even own your own house. You still live in a rented apartment. So that's the way it works. I missed you, and please, your voice is breaking. I missed what you said about WhatsApp. I didn't say anything about WhatsApp. Okay. I said that I shared a document on your WhatsApp group, right? On this class WhatsApp group, just before the class, that shows the names and of some sub-brokers that you can reach out to. They are my own account officers in those companies that you can simply ask them to support you to open accounts. Right. I think we should call it a day. Thank you everyone again for your time and attention. Enjoy the rest of your day. Bye for now.